Good afternoon, everyone. A very warm welcome to this session titled Assets from Concrete to Ether. My name is Xin Guan. I'm from China Global Television Network. Well, we're here to discuss one of the most dynamic transformations in the world of assets and finance. As we know, tangible assets have traditionally formed the backbone of the financial markets. However, with the rise of blockchain and digital technologies, some of these assets are now transferred into digital tokens, fungible, transferable units of value that exist only on decentralized ledgers. In the past year, we have seen the tokenization gaining momentum even at institutional or in some cases governmental levels. But it still challenges many long-held conventions in law, regulation, and financial market operations. The industry faces a dual imperative to seize the opportunities provided by this technology and to carefully navigate the risks. This session aligns with World Economic Forum's Tokenization in Financial Markets initiative, which seeks to explore the very questions by analyzing existing use cases and identifying what's needed for scalability and financial viability in the longer term. And let me briefly introduce our esteemed panelists. Jeremy Allaire, CEO of the Circle Internet Financial, a global blockchain-powered financial services company. Welcome. Jeremy has also provided expert testimony on digital assets and monetary policy to the U.S. Congress and serves on the IMF high-level advisory group on fintech. And next to him, Marc Bayle de Jessé, CEO of CLS Bank International. Marc brings 2 decades of experience in financial market infrastructure and has 2 decades of experience at the European Central Bank. Thank you so much for joining us. And top, founder and CEO of, I introduced Ola Doudin first. Co-founder and CEO of BitOasis, the Middle East's largest digital asset platform. Ola has been recognized by Forbes Middle East as the top 10 women behind Middle Eastern tech brands in 2021. Congratulations and welcome to the panel. And top, founder and CEO of BitCup Capital Group Holdings, Thailand's largest blockchain and digital assets company. And Top is also an executive board member and vice president at Thai FinTech Association. Well, thank you all for being here. And before we get started, I encourage everyone to, including joining us online, to share your thoughts from this session using the hashtag Web25. And let's start with a broad view about where we are in this tokenization process. Jeremy, let me start with you. What trends or milestones do you see as defining this current phase of tokenization? And I hope it's not Trump meme coin.
No, very much not. Thank you. It's great to be in the session. I'll step back first before zooming in. I'd say, stepping back, the promise of tokenization was sort of conceptualized over a decade ago, and it's what brought a lot of entrepreneurs into this industry. And the idea that you could have a digital token that represents something, and that those digital tokens could, thank you. Okay, is that all right? Okay. Switch places for a moment. So conceptualized 10 years ago, these digital tokens could be running on these open networks, and that would be able to move those assets at the speed of the internet, the same way we move other assets. And the other big idea was that you could automate this with smart contracts, and that would create new ways to structure markets and intermediate finance. So those were the big ideas. Fast forward, it took about 5 or 6 years for even any of that to become technically viable. And I think it's important to put into perspective, the first and largest tokenized asset is tokenized fiat currency. And so that's what we do. That's our primary business, is tokenizing cash in the form of USDC. And tokenized cash in the form now we know of as stablecoins is a huge market today. There are well over 200 billion digital dollars, tokenized cash instruments. Some are truly cash-like, meaning they're reserved as you would an accountant would consider something cash. Others are not quite cash, but still it's quite large. And that tokenized asset, is now handling over $30 trillion a year in transactions on blockchains. So we have a huge at-scale thing, and the leading companies, including Circle, are large, significant scale, very profitable financial businesses now. The more recent trends, though, I'll touch on is really this idea of further tokenization. We have tokenized cash. What other real-world assets could actually take advantage of the same fundamental technology and get improvements, whether it's in capital markets and in investments or ultimately in other areas like intellectual property and the like. But I know our focus here is primarily on financial markets. Over the last 12 months, in particular, the second major category of tokenization really took hold, which was the tokenization of essentially treasury bills and what we think of as short-term money, like money market funds. So that really was introduced. You had both startups and traditional issuers come into that space, and it's relatively small still. So we went from 0 to about $3 billion of these tokenized assets, but has grown quite rapidly. And this is something that we just got into as well. We acquired the largest tokenized money market fund, which is about 40 or 50% of the market, U.S. yield coin. And I think this is a huge area. So when you think about financial markets, you have the building blocks that are really, you have cash that you can use for payments and settlement. You have short duration collateral and yield, which market participants want. And those can grow quite a bit together. When we think about the total money supply today of electronic money, a huge amount of it is in those things. Well, so that's sort of the short term. But once you have that, then this can really broaden out into the real economy. Once you have kind of cash and collateral that can move in these internet native ways, then you can start to think about other types of investable assets that can use those as underlying financial building blocks. And so I think the big idea is ultimately everything that you'd ever see in a capital market, from every form of credit, every form of debt, every form of equity, every derivative, all of these will be digital token based, intermediated by smart contracts, running on blockchain networks that are highly available around the world. And that's, I think, clearly where we're headed. But it took us 10 years roughly to get to where we are today, probably another 10 years before capital markets infrastructure more broadly is sort of built up around this.
Mm-hmm. And Marc, as the CEO of the CLS Bank, how do you understand the current phase of this tokenization, and how long along has the financial sector, like banks, integrate this into their core processes?
So first, thank you to have me here. I am the only one with a tie, and I feel like a stranger, not fitting completely there. So it's interesting to speak about those tokenization. When I was invited, I look at the title. It's quite interesting. Asset from concrete to ether. I hope it's concrete, your token, because it represents a concrete wealth. It represents a concrete cash in the case you just mentioned, Jeremy. And therefore, the necessity to keep this is very important. Otherwise, if we create a world with fictitious values or fictitious assets, that's another story. And that's why probably the adoption of this technology has been a bit long, because it has been created under the premises of some assets which are not so clear what they are. I mean, the Bitcoin, not to speak about them. While here we speak of real assets, when we speak of tokenizing cash, tokenizing treasury bills, securities, that's another story. That's really moving concrete value from one place to another. So probably the adoption of this technology could be much easier in this context, I would say. So for me, the fact that this is going and taking time is mainly driven by the use case that you can have on the different usage. And maybe colleagues afterwards will mention some different use cases which are specific to a region, specific to a technological development environment, where this technology can be a better fit than more traditional technology, and therefore being more answering the need, and therefore an adoption which could be quicker than in other cases. Today, CLS Bank International, which I am steering, is doing FX settlement transaction, and the tokenization is not really an issue there or a question. Because it is already digital since inception, so it's more than 2 decades old, the system, and therefore the physical friction is not at all a problem. We are speaking much more of finding the appropriate legal, regulatory, and governance solution to make that work. And it was interesting to hear the example just that you mentioned, Jeremy, which is within a single regulatory space, and therefore easier to implement as soon as you get into a more international and friction between different jurisdictions. The problem, again, will be of a different nature, and therefore use case has to be found to justify this technology. But adoption is long, and we are all living in financial world under strong regulatory frameworks. It can be stronger in some jurisdictions than in some others, and might become lighter in some others as we go. But this regulation is made for a good purpose. At least the intention is to make sure that safety and stability of the system is preserved, which was the main intention of the regulators. Sometimes they eventually go too far, but that gives a safety in the system.
That's a very critical point. And Ola, in your opinion, how ready are people, businesses, or even governments in the Middle East for the tokenization of assets?
Great to be with everyone here. Definitely agree with Jeremy and Marc in terms of the trends in the industry, in terms of how tokenization is taking shape. And I think in the Middle East, you definitely see governments, businesses, and consumers embracing tokenization. So to give you an example from a consumer adoption perspective, stable coins, USDT, USDC are amongst the highest traded assets. There's some months where it's higher even than Bitcoin, which tends to be the highest assets in terms of daily volumes and monthly volumes on the platform. That was not the case 18 or 24 months ago. So we definitely see consumers, individuals, businesses, high net worth individuals leveraging stable coins for cross-border payments, real-time payments, and to some extent access to tokenized dollars or easy access to tokenized dollars. Now, if we zoom out of the Middle East and look at recent statistics, across emerging markets, so regions like Sub-Saharan Africa, in the Middle East, I would say particularly Turkey, Argentina, where there's high inflation rates. In terms of assets that are being received on a yearly basis, stable coins make over 50% of assets that are being received, versus in the US, I believe the statistic from Chainalysis was close to 37% or so. So there's definitely high demand to tokenized dollars, particularly when it comes to, I would say, countries or economies where there's high inflation rates, and to some extent, I would say, clunky payment systems where stablecoins can be leveraged for that. I think just going back to the Middle East in terms of adoption, so I spoke about consumer adoption that we're definitely witnessing and has been growing on a yearly basis. But equally as important, I would say, is governments really pushing tokenization in the form of regulatory frameworks. And I think there are different reasons for that. So governments across the Gulf obviously have adopted as a priority to build more robust, transparent capital markets. So that's in the form of regulatory frameworks for market structure, participants, or in terms of issuance of assets and all of that. And really, tokenization comes at the core of that. Tokenization, and I would say broadly, crypto assets in terms of also activity. So, you see that across Abu Dhabi, Dubai with Virtual Asset Regulatory Authority, Qatar with a big focus on tokenization. So there's a big push to build that industry and then build the right regulatory frameworks, not just for local players, I would say also for international players. They're particularly building, or essentially building products and market structure to really grow the industry. in a meaningful way. And a lot of that is to bring liquidity to those jurisdictions. So we definitely play a key role there in terms of us as a broker-dealer and custodian to be able to provide access for those assets and liquidity, at the end of the day. Just to kind of give an example, there's obviously a lot of that tokenization from a regulatory perspective for both, liquid and, illiquid markets. But I think an interesting angle that we do foresee a lot of growth over the next, 2 or 3 years is tokenization of real estate. And obviously in the Gulf, particularly I would say Dubai, the real estate market have shown double-digit growth, and that continues to grow. So like a recent statistic is that in 2026, there'll be 80% higher real estate units that will be introduced to the market versus 2024. So they've been obviously, the GCC, but I would say particularly Dubai, has been experiencing tremendous growth, particularly in the real estate market. And there was a recent deal that was signed by DAMAC, which is the largest, one of the largest real estate developers with a blockchain provider called Mantra, to tokenize 1 billion of real estate assets for DAMAC. So we definitely see a big push from governments, corporates to embrace tokenization. And I think GCC can potentially take a lead in terms of growth in that industry.
Since remarkable growth due to the joint forces of the governments and businesses and the consumer readiness. And what is your sense of the tokenization development in Thailand, the broader ASEAN and emerging markets? There are some specific local dynamism accelerating this process?
Sure. Glad to be back here at Davos again. I agree with Jeremy that in the next decade, anything that can be tokenized will be tokenized. In the past 20 years, the internet has already successfully digitized all kinds of information. Right? Anything that can be digitized has already been digitized. And with the blockchain in the next decade, all kinds of value will be tokenized, not just like money market funds. And with Ola just said, her prediction, you predict that in the next 2 or 3 years, real estate is going to be one of the real use cases for tokenization. I would like to add on that that notion that it's already happening in Thailand. Right? Thailand is so under the radar on a global scale. We got to the point that 10% of all the population got crypto in Thailand. Right? 1 out of 7 people has our application on their phone. And part of the reason is because our regulation is so advanced. We've been working closely with the Thai regulators, the SEC, for almost 2 years for this real estate-backed token. Our client is called the Origin Group, top 5 real estate firm in the country. And we've been working with them and also the SEC for almost 2 years. And we successfully raised $50 million, not as quite as $1 billion yet, but $50 million for our clients. And the token is traded every day now on our exchange as we speak. So the concept of real estate tokenization is that instead of owning the whole room for $10 million, we fractionalize into micro units. So the ticket size is down from $10 million to $10 per unit. So we are democratizing investment opportunity. And this is already a successful use case in Thailand. It's been on almost 2 years. And by the end of this, it was going to be the end of last year. The process got delayed a bit. We're going to be listing green token very soon. Carbon credit tokenization, electricity unit tokenization. So Thailand is really under the radar. And the reason why we are moving so fast is because we have a stable and clear regulation. So we're going to be listing green token very soon on a regulated exchange in Thailand. And also under this current government, they're launching stable coins for Phuket now, the tourism hub very soon. And they're also exporting soft power. Right? So instead of only just tokenize fungible token, we can also tokenize non-fungible token for IP, right? For different soft power intellectual properties going forward. Mm-hmm. So I would say, Thailand is moving really fast, and the regulator has been very, helpful. Mm-hmm. That's why the adoption is growing quickly, and in the next 2 or 3 years, I agree that we're going to see more than just real estate. We're going to see all kinds of assets being tokenized on an open system.
So talking about different industries be impacted by tokenization, Jeremy, I want to have your thoughts on which sector or which industry holds the greatest potential coming up next.
So, I mean, I've thought about this for a while, and I think from a financial industry perspective, there are a couple of megatrends that are already going on in the world. So one is the shift from bank credit to private credit. And, essentially, lending models for credit delivery, whether it's to corporations or even ultimately underwriting credit to households, that's coming from these kind of private credit institutions. And that's grown massively. And as you've seen from some of the major, M&A with BlackRock and others, there's a huge focus on this. Now, what's interesting about that is that part of the philosophy of crypto and blockchain is actually built around this idea of kind of full reserve money. And if you have full reserve money and then you have credit intermediation done on a blockchain, you could actually potentially deliver a safer credit delivery system than what banks do today. And so when I actually step back and think about it, I actually think one of the largest and most exciting opportunities is the tokenization of private credit and effectively enable people whose job it is to figure out if someone is creditworthy, and that could be highly decentralized. You could imagine, the analogy I like to use is Amazon or Alibaba are these incredible marketplaces. And someone can create a very unique product and there's a buyer for it, and you've been able to get super, super diversified all the way, people call it long tail markets. We've seen the same thing in advertising. AdWords is the most efficient marketplace for attention, selling of attention. And we've never had that kind of capital market, but I actually think if you could tokenize, these very small amounts of credit, you could actually have the people who make decisions about what's creditworthy be as broad and automated with AI and data as we have with advertising and e-commerce and the like. And so I envision a world over the next 10 years where credit delivery and tokenization of private credit, it becomes actually potentially over time much larger than bank lending. And so that's, to me, that's a very interesting area. It doesn't require us to take some external concrete asset, because it can all just be done with digital cash, like stablecoin, on these networks as well. So that's something I really see developing and am quite excited about.
And let's examine how may various financial services evolve as a result of tokenization. Marc, I want to have your view on this, especially how do you think that those financial institutions should balance their need for innovation and their judiciary responsibilities?
So the question is really broad. If I look at it from CLS Bank perspective, with a financial market infrastructure who provides infrastructure to settle a specific layer of the market, innovation is critical. So we are looking at innovation, and we are trying to understand what are the new technological development that could help us. So tokenization is one of the topics. That's why we are there today in this panel, by the way. We are looking at this. We are trying to understand those developments. But there is other technological development which are also very important. I mean, artificial intelligence, which is one of the big themes here at Davos this year, is clearly also very important. So there is many aspects that we have to look at. I am just extremely careful as a financial market infrastructure on the adoption of those technology to make sure, again, that the focus, maybe it's because I was there before, as you mentioned it, in central banks, the stability of the system we deliver is absolutely key. We cannot take a chance on that. And therefore, the clear effect of what we are doing has to be fully understood before adopting too much of those technology. The second dimension we look at, when we look at, again, the specific case of an FMI like mine, is to see the cost of operation of those technology. So again, here we have to be careful that the cost of implementing those technology and the stability that it brings should be at the level which allows to do that. So I come back to my first remarks. The use case will define, in fact, the adoption. The example which was given now is a very good one. There might be good example also for financial markets, which could work, and for the wholesale part of the financial market in which we are. But it's not always universal. And maybe one thing I wanted to say at some point where I have the microphone, the premise of a lot of those use cases is that faster is better, usually. It's not always true in the financial markets. When you have deep markets with a lot of transactions which are done within a short time frame, typically within a day, let's say, in particular true in the FX market, where you buy and sell the same currencies to create depth in the market and liquidity, you want to net those activities to one payment at the end of the day so that you don't create problem on the access to liquidity. And that is critical in the functioning of a settlement market, for instance, or FX settlement capacities. So again, we have to look carefully to which segment of the market we can bring those elements. But for sure, this will develop. And the tokenization, the fact that you digitalize in a clever way a financial instrument will be very helpful.
Mm-hmm. And Ola, do you think Marc is too cautious?
Too cautious? From what sense you mean?
I mean, the need to regulate the market more carefully. And do you think we should innovate more, like new entrants like the BitOasis? How is you adapting to the fast-changing consumer needs and bridge the financial gap? And what are your considerations for the ethical and safe development of tokenization?
Yeah, so obviously, I think that happened in our case, like in crypto, but I think eventually with any new innovation is that the builders and the operators and particularly I think entrepreneurs and startup builders are always ahead of the regulation. So essentially, you want to kind of build the innovation, get some form of scale until it becomes an issue for the regulator to really look at and then say, all right, now we can scale and regulate the industry. And definitely from our experience, that also has been the case. But I think with tokenization, it is a proven use case. And not just that, it's a proven use case for governments and regulators that it can help governments hit their KPIs as well. So I mentioned in terms of the liquidity, building more robust capital markets, potentially bringing liquidity into real estate as well, and growing the industry further. So there is a huge overlap, I would say, in terms of the innovation in the industry, the value creation, obviously, that it can bring, and then with government KPIs, particularly I mentioned in terms of the Gulf region. So I feel that when it came to tokenization, it was sort of a no-brainer for governments to come in and really tackle it as a priority. In fact, I believe in Qatar, the framework for tokenization was prioritized over crypto asset regulation. But obviously, I do believe that crypto assets, broker-dealers that trade assets like Bitcoin, ETH, etc., are part and parcel of tokenization ultimately, because you have to build on public blockchains for various reasons in terms of scalability, security, robustness, etc. But you kind of see in terms of how governments are really looking at it from a priority and kind of perspective. Ultimately, for the industry to scale, you need regulation, right? So you need different stakeholders to work together, really kind of build the industry to unlock value, and ultimately have the institutions, the corporates really come in and play a big role, like the MAC, for instance, being one of the largest developers, really participate in that industry and kind of unlock value. So we definitely kind of see that like happening, but it needed regulators and governments to really understand the potential of the technology ultimately for them to prioritize it. In terms of setting the right frameworks and rules. So yeah, but I think on the point in terms of like the trends in the industry, and I just want to kind of double click on the real estate and the payments part as well. I think often we have people saying, well, but fractionalization or tokenization is sort of like not a kind of new thing. So what is so interesting, about that? So I think, kind of like picture if you're a real estate investor, so essentially you're buying your units. Part of that is a token deal where you earn further yield. So you have even higher yield in terms of yearly rental on your apartment, where you're generating, obviously, rent and in terms of your yearly yield on the asset itself, but on the tokens as well, additional yield. That makes it way more competitive and lucrative, investment versus the other investments that could be in the market. So that's, I think, like an interesting proposition. And then the additional liquidity that can be brought into the real estate market in terms of participation and access and all of that. I think from a stablecoin perspective, and one thing that we're very excited about, that a lot of the countries within the Middle East and North Africa region, I think if we zoom out of the GCC, don't actually have robust national payment systems. So there is an opportunity to leapfrog here and actually build blockchain-based payment systems that don't necessarily have to be CBDCs from kind of day one, but then if essentially entrepreneurs and startups can innovate in that area, where there is also potentially interoperability between those different stable coins across blockchain. So I think that obviously would be groundbreaking in terms of cross-border payments, trade across different kind of countries across the region, which is quite exciting. So I think that would be a big opportunity to also unlock growth across different economies.
Mm-hmm. And how is the regulatory landscape looks like in Asia, and how are financial institutions in Asia evolving in this tokenization process?
To be honest, it's quite fragmented in Asia, and we really need standardization of regulatory clarity. Otherwise, there are going to be bad actors hiding in one of the islands and trying to take advantage of the regulatory arbitrage, right, that we have seen in the past. And that also makes things worse for the government, because when there are bad use cases or bad incidents, they're going to become even overly conservative because of a few bad actors destroying the image or reputation. But I don't think under Trump's administration the government is going to be conservative anymore. Right? Moving forward, innovation is going to happen super fast in this space. But there's no alliance of regulators yet that would create a conforming regulation across the ASEAN region, actually the whole world, because eventually liquidity is going to be free flow, right, throughout the whole open system. So we need to work on the standardization of regulation, standardization of technology, scalability of technology, and also humanization. How do we hit mass adoption if we're going to have to still talk about cryptographic hash function, private key, public key, the non-human language that the crypto people are using today. We need to humanize the experiences so that people in Asia can use the technology without them knowing that they are even using the technology. And I think it has a big potential, tokenization has a big potential to bank the unbanked. With a phone that is connected to the internet, they can tap global liquidity and get access to the best financial products, which we will see an order of magnitude more financial products coming out on an open system, on chain, on the blockchain. And also the trade financing issue. Right now there are 2.5 trillion trade financing issue that only big companies get access to. And once everything is on chain, we can utilize AI. Once everything is in a digital format, we can release loans in 3 seconds. We can tokenize letter of credit with transparency, efficiency, automation, smart contract. So there are benefits that are going to come very soon, but we need to really standardize the regulation and scalability and interoperability of technology. We probably need a central body to help align going forward.
Mm-hmm. So looking ahead, how will the industry, what are needed for it to progress the technology application, and would you expect the pace of tokenization in 2025? Maybe some brief thoughts finally from all of you.
I'll go very quick. I actually think this is a little bit like where we were with the web in 1996, 1997, and where I think you actually don't want to overprescribe. You want to have a very basic set of boundaries around the issuance and trading and use of digital tokens. And you should allow entrepreneurs, businesses, intermediaries, within basic parameters to unleash and unlock using digital tokens in a huge area of experimentation. And if we didn't create that space for web entrepreneurs and internet entrepreneurs in the late 90s, we wouldn't have so much of what we really take for granted today. And so I actually think it's an opportunity for light touch regulation with the basic safeguards, not overly prescriptive. And I think if the United States can lead with that, and the United States is demonstrating to the world that the best entrepreneurs, the best companies, the best builders are doing that in the United States, I think that will create an impetus for lots of other markets around the world, much as what happened with the internet itself, which really unlocked the incredible range of things that we see today. And so that's I guess, my short-term take on what's needed.
Mm-hmm. And Mark, you still look a little bit cautious. Me too, actually. I actually have a question. Is it tokenization may also lead to a too big to fail problem if the market grows very quickly?
Yeah. Aren't we already there? I mean, that's more the question, no? Yeah. I don't know how to answer really this point. I mean, indeed, what is important for me, I mean, when I hear my panelists, I am quite optimistic. When I hear you, I am more pessimist with the last intervention which was made. The problem we are trying to resolve in financial markets since I work, so unfortunately it's not 2 decades, 3 decades, is standardization, is trying to make interoperability between the various segments of the market working. And if, to go to the next stage, as you said, we need this standardization across different jurisdictions which have no common interest, while we are not even, as human here I'm speaking simply, able to get to this level of standardization even within a set of countries which have a common interest like the EU, then it will take some more years to get there, to say the least, because this level of standardization of regulation, standardization of technical features just by defining what is a token. We don't have yet even a definition, I think, agreed amongst everyone on what is a token. I am sure if I ask the question in the room or in the panel, I get a different answer. Will take time to get there. Mm-hmm. Now, the good of the ecosystem which are built will be incentive to get there eventually. But the governance, finding the right governance, is always the difficulty when you get into cross-jurisdictions context. I am living it and breathing it every day in my 18 different jurisdictions that I have to manage every day, and with a system which is working. But to create this common goal and common incentive is really difficult. Mm-hmm. But it worth the money if it works as we can do it.
Yeah, well, that is very important for long-term development of tokenization. And Ola, what do you expect the pace of tokenization development in 2025? There are some specific dynamism you are looking at?
I think the value proposition is there. It's clear. I think the demand is there. Adoption, obviously, would follow. There's no shortage, I think, of entrepreneurs or builders in this space that would tackle the opportunity. But I'm going to echo actually Jeremy's words in the sense that light touch type of regulation. So innovators, startups can actually innovate in this space without heavy regulation that ultimately makes it very difficult to tackle the opportunity. So I think that would be, a main takeaway. At least for me, I think, and even when we talk to regulators, we try to really kind of double click on that point. It's great to have regulation that is comprehensive, but often it becomes very difficult to implement in practice, particularly when there's a lot of focus on risk mitigation to an extent where businesses aren't able to run profitably when the business opportunity is still kind of early days or emerging. So that would be, I think, my input.
And top with the ASEAN with different level of varying level of technology maturation, how do you expect the pace of tokenization in 2025?
I think the Singapore and probably UAE will lead the adoption, will lead the way for tokenization, and we will probably see institutional adoption in some of these places. I think a few days ago, the CEO of the Bank of America said if the regulators allow them to adopt crypto, they will adopt crypto as a product. So, I think one major player has to take that action, and then it's going to create a ripple impact, the game theory impact, and then the rest of the world would adopt. And I foresee real estate tokenization is going to be one of the easiest use cases we see in 2025, and probably carbon credit tokenization in Thailand, for instance, and areas like Singapore, UAE will probably lead the adoption.
Thank you, and we may have time for one or two questions from the audience. That lady.
I live in the UAE, and I hear there's obviously a lot of positivity around tokenizing real estate. What I have issues trying to understand is the liquidity in the second market for that. Just because you can tokenize something doesn't mean that you should tokenize it. And do you really believe that there is a need in the market for it? With real estate, it's very heterogeneous in nature. Is it really that much more of a demand for it than perhaps going to an ETF or a REIT? If you could speak to it, anyone. Thanks.
I can tackle that. So yeah, I think like REITs existed, et cetera. I think the main point though with tokenization is so fractionalization. I think ownership of real estate is one, but ultimately is for real estate developers to be able to provide a better proposition for their customers from a yield perspective. So I think that's another angle that they find quite attractive, with tokenization. Where there is more kind of obviously competitiveness across different real estate developers. And then they also see it as a fundraising angle potentially with some of the real estate developments that they are introducing newly to the market. Now, in terms of the market structure for liquidity, in terms of like, do you have like a second market or do you have the exchanges? And so there's a lot of kind of infrastructure work, obviously, that needs to be established. And not just that, I would say also a legal framework, like the land departments, the court systems, etc. So there's still obviously a lot of work from an infrastructure perspective that needs to be put in place. But I believe that once you have the adoption, or in the sense that interest from the institutions and the big corporates, and there is actual signaling from customers and investors that they're interested in that product, I think those kind of things would fall in place ultimately. So.
Mm-hmm. Any more?
Hello, thank you. I know you're not macroeconomists, I am a macroeconomist, but I'm just wondering if you anytime had a deep debate on what would be the consequence for monetary policy, and to be more precise, how central banks can manage cycles, economic cycles, in a world of fully decentralized finance, in a world of private credit. Have you ever, anytime, had a big discussion on this topic? I have a hard time thinking on how they could manage cycles, and the idea of decentralized is probably to get away from government intervention also on these policies. Just would love to hear your views.
I'll take a crack at that. I think, so first of all, there's not a move, decentralized technology infrastructure, the internet's decentralized technology infrastructure is distributed around the world based on open protocols that are permissionless that anyone could connect to. All we're saying, the only thing I'm really saying here is that the decentralized compute operating systems that are blockchains, that's a powerful infrastructure. It enables better reach, interoperability, efficiency. So that's like a technology layer. It's not about the principle of getting away from governments per se. In terms of the premise around monetary policy, I mean, the banking world and regulators and central banks, at least going back to the 1930s in the United States, made a choice, which was allow banks to leverage capital on a 10-to-1 basis, or 12-to-1 basis, and mutualize the risk with insurance. And that model, fractional reserve banking, is how credit delivery happens today. You still have the central bank setting an interest rate on the risk-free rate of holding money with them. There's nothing that prevents you from having an interest rate that's a risk-free rate that is the price of money at the core central bank level, but also have full reserve accounts where the lending is happening with full reserve assets. And that was the big debate after the Great Depression. The Chicago Plan put forward the idea that you'd have payment banks that are only holding permanent full reserve capital, and you have lending institutions that can use that to make loans, and that would smooth economic cycles, reduce recession risk, and ultimately fulfill the credit delivery needs that exist. We now actually have the technological basis to do that at scale, and that's exactly the design of USDC. It's a full reserve digital dollar, and it's designed for a world where credit intermediation could happen, directly, and that doesn't need to be levered. And so it's aiming towards a safer model, but it's still the dollar, and the underlying credit, or the underlying, kind of capital cost in terms of interest rate is still, we're inheriting the monetary policy of the Federal Reserve. We're not doing anything away from that. So I think there's a way to do it. And I actually think it represents a huge opportunity for both improving how credit works in the world, making it more accessible, greater reach, more efficient, more scale everywhere, and reducing risk in the real financial system.
Maybe I can add one. I mean, I agree completely with what Jeremy says, but also maybe it explains why central banks are only mostly looking at CDBC model, where they keep control of the currency. It's just another form of circulation of their currency. So you have banknotes, you have eventually CBDC, and then you have normal accounts structure, centralized. They want indeed to keep control on the monetary policy effect, so either by immobilization or by different mechanism. And yeah.
Thank you so much, and that's all the time we have today. And I encourage everyone to continue to share your takeaways from this session using the hashtag WEF25, engage with the broader community. And many thanks to our esteemed panelists for your invaluable insights, and thank you for our audience for being here with us. And that's all for this session, and enjoy the rest of the forum. Bye-bye.